session will be taken up by Mr. Singh, who is a member of Honorable Supreme Court of India and fellow member of Institute of Company Secretary of India. He has secured doctorate in law. Mr. Singh is an advocate by profession and practicing at Honorable Supreme Court of India. He has extensive experience of more than 20 years in litigation. Mr. Singh is the founder and partner of an international law firm, namely Nux Legal. Nux Legal has been operating as a corporate law firm in retail concepts and currently handling litigation matters in more than 500 districts in India and abroad. Mr. Singh is also running an NGO with the name Style Vijay Vidya Foundation and serving the poor and needy people for the upliftment of their education, social, and living standards. Mr. Singh is a visiting faculty of IIM, Institute of Company Secretary of India, and Institute of Chartered Accountant of India. He has visited others law colleges and various business schools in India, of course. Mr. Singh is also socially and politically active and contested successfully the elections of Legislative Assembly at India twice. Now, I would like to call upon Dr. Nityanand Singh to proceed with the session and enlighten us all upon the same with his knowledge and wisdom. We welcome you, sir.
Thank you, Ms. Kati, for such a wonderful introduction. First of all, warm good morning to all of you, friends. Today we are going to discuss laws governing the credit notes. So first of all, you have to understand what is the credit note is and which law govern that credit notes. So I would like to invite my friends because this session is going to be a very interactive session. So I'd like to invite my friends, if anyone up know what is the credit note. Yes, Mr. Ayush, are you aware about what is the credit note?
सर क्रेडिट नोट मैं बता रहा हूँ। क्रेडिट नोट वो होता है जैसे कि हम किसी को 2-3 लाख रुपए कोई मुझे दिया, जैसे मेरा कोई फॉर्म है या कोई होटल है, 2-3 लाख रुपए दे दिए, अब उसको फिर वापस ले लेना है तो हम उसको 2 लाख रुपए दे दिए और 1 लाख का उसको चेक मतलब क्रेडिट नोट कर दे दिया कि अगर आपका कोई सेशन है या कोई प्रोग्राम करना है तो फिर आप आकर के हमारे यहाँ कर सकते हैं।
वापस दे दिए मतलब
जैसे कि आप किसी फर्म को चला रहे हैं या किसी होटल को चला रहे हैं, आपके यहाँ हम बोले कि ठीक है जी हम आपके यहाँ प्रोग्राम कर रहे हैं, तो आप बोले कि हमें 3 लाख रुपए चाहिए, हमने आपको दे दिए, फिर किसी त्रुटिवश हम आपके यहाँ प्रोग्राम नहीं करा पाए तो फिर हम आपसे कहेंगे ना कि जी हमारा पैसा वापस करिए, तो आपने बोला कि अरे जी अभी तो हमारे पास है नहीं, 2 लाख रुपए ये ले लो और आप मुझे 1 लाख रुपए का क्रेडिट नोट दे दीजिए।
अच्छा
जी मेरे समझ पे यही है, बाकी अब आप बता देंगे जो थोड़ी बहुत कमी है तो उसको सुधार कर लेंगे।
थैंक यू ग्रेट। एनीवन ऑफ यू? यस प्लीज, और कोई बताएं?
यस सर।
हाँ बताइए।
पल्लव दिस साइड।
जी जी प्लीज।
सर मैं एक पैंटालून में या कुछ भी ब्रांड में गया शॉपिंग करने, मैंने वहाँ पे जीन्स ली कोई 10,000 रुपए की, ठीक है, और मुझे पसंद नहीं आई तो विद इन अ पीरियड ऑफ 25 या कुछ डेज रहता है तो मैं वहाँ गया, मैंने जीन्स उनको रिटर्न कर दी, ठीक है, और उस टाइम मुझे कुछ परचेज वहाँ पे करना नहीं था सर, मतलब उनके पास ऐसा कोई स्टॉक नहीं था जिससे मैं परचेज करूँ, तो वहाँ पे उन्होंने मुझे 10,000 का क्रेडिट नोट इशू कर दिया, ठीक है। फिर मैं गया नेक्स्ट वीक, फिर मैं गया वहाँ पे और मैंने 7,000 की वहाँ से शॉपिंग कर ली और वो 10,000 का क्रेडिट नोट सरेंडर कर दिया। उन्होंने 7,000 काट दिए और उन्होंने कहा कि 3,000 का क्रेडिट नोट दोबारा ले जाइए हमसे, और ये जो बैलेंस अमाउंट है वो हम कैश नहीं रिफंड करेंगे। फिर क्रेडिट नोट उन्होंने मेरे को 3,000 का इशू कर दिया। तो ऐसे ही फिर मल्टीपल ऐसे ही फिर हम दोबारा भी शॉपिंग कर सकते हैं सर, उसमें ये रहता है क्रेडिट नोट में।
जी गुड गुड। चलिए, इट मीन्स all our learned friends who are joining this session is aware about the credit notes. Thank you. Then we will discuss about the laws governing the credit notes. What are the governing laws of the credit notes? First of all, we will discuss about the credit notes. What is the credit notes is, as our learned friends have discussed, all aware. Credit notes in India. Am I audible to all?
Yes, sir.
credit notes in India. This presentation explores the legal framework, issuance, and implications of the credit notes in India. It covers the essential requirement of the valid credit notes, their role in adjustments and refunds, and tax implications. Then we have to discuss what is the credit note, which law govern the credit notes. Section 34, subsection 1 of the Central Goods and Service Tax Act 2017 defines credit note as where one or more tax invoices have been issued for supply of any goods or services or both, and the taxable value or tax charge in that tax invoice is found to exceed the taxable value or tax payable in respect of the such supply, or where the goods supplied are returned by the recipient, or where the goods or services are both supplied are found to be deficient, the registered person who supplied such goods or services or both may issue to the recipient one or more credit note for supplies made in the financial year containing such particulars as may be prescribed. As you have already discussed, जैसे कि सुशील जी ने भी बताया और पल्लव जी ने भी बताया कि जो क्रेडिट नोट्स होता हैं तो ये इन्होंने स्पेसिफिक एक सामान परचेज करने के रेफरेंस में बताया, और ठीक भी है कि अगर कोई, और हम इसको जो है टैक्स के इम्प्लीकेशन से भी देखते हैं. व्हाट इज द टैक्स इम्प्लीकेशंस? So again, we will go through the definitions. Credit notes, where one or more tax invoices has been issued. Once you are selling something and you have issued the tax invoices, suppose once you have sell a goods of value of rupees 1 lakh, its invoices have been issued for the supply of the any goods or services. You have raised the invoices or both, and the taxable value or tax charge in that tax invoice is found to be exceed the taxable value or tax payable in respect of the such supply. If it is you have raised the value of rupees 1 lakh, and out of the 1 lakh, the value of 90,000, and you have raised the taxable tax amount, that is 10,000. And if the whatever the amount you have raised exceeds the taxable value or tax payable in respect of the such supply, then you can claim your refund, or where the goods supplied are returned by the recipient. Once you are supplying the goods and which has been returned, suppose sometimes it may be possible that you are supplying the goods, and it may be possible that there is a lot of 100 shirts, and out of 100 shirts there are the 2 or 3 shirts are the defective piece. Then the purchaser can return those 2-3 pieces to you, or where goods or services are both supplied are found to be deficient, and if it is found defective, then he will return to you. Then either you have to pay that amount of defective 2-3 shirts, or in replacing 2-3 shirts, you can again give 2-3 shirts. Otherwise, what you can do is that you can issue a credit note that yes, you have refunded, you have returned 2-3 shirts, and in respect of that, please receive a credit note. Whenever you will come again to purchase the shirts, then certainly this amount will be adjusted in the next purchasing. So this is the credit note. The registered person means assessee who has supplied such goods or services or both may issue to the recipient one or more credit notes for supplies made in a financial year containing such particulars as may be prescribed. The word financial year is the very important here in respect of the income tax paid. Suppose if you are paying the income tax, suppose once you have sell a value of 1 lakh goods, and out of 1 lakh you have paid 10,000 as tax, but sometimes it may be possible that you are paying the excess amount to the government, then you can claim refund of excess amount. Otherwise, you can adjust that 10,000 in another when we are paying the another tax. So it can be adjusted as well in the financial year. And this is also the law which says that whatever the credit notes you are issuing, certainly we will discuss later on, that has to be in that particular financial year. Then you can claim that amount. So you have, once you are filing the returns, then you have to mention in your return that yes, this is that for the particular year. Certainly we are going to discuss then what is the relevancy of the financial year, because there is a tax implications on this credit notes. Then you will discuss legal framework from the credit notes. Which law governs the credit notes? Earlier, it was the sale of the goods at 93. Now it is central GST. It is governed by the GST. The Act provides the foundation for credit notes, allowing sellers to issue them for return goods or price adjustment. There are two things. There is a return goods or price adjustments. Once someone is returning the goods, then you can issue the credit notes. Otherwise, you can also adjust the prices. Suppose 2-3 shirts price is approximately 2,000. Then in the another purchasing, you can adjust that 2,000. So you will demand a less amount of rupees 2,000. That is the price adjustment. Central Goods and Service Tax Act 2017, the GST Act outlines the tax implications and treatment of the credit notes under the GST regime. These law governs the credit notes. Income Tax Act 1968, 1961. The Income Tax Act governs the taxability of the credit notes, impacting both seller and buyer's income tax liability. So there are the two governing laws: Central Goods and Service Tax, CGST, and Income Tax Act. Issuance of the credit note. When the credit note can be issued. First, that is return of the goods. When the buyer returns goods due to defects, damage, or other reason, the seller can issue a credit note to adjust the invoice value. We have already discussed the examples. Once the buyer returns goods due to defects, damage, or other reason, or any reason, once the buyer is purchasing the goods, we have given the example of the shirts. Suppose if the buyer is purchasing the 100 shirts, and out of 100 shirts, 2-3 shirts are defective, not up to the mark, then buyer can return those 2-3 shirts to the seller due to defects, damage, or other reason. The seller can issue a credit note to adjust the invoice value. Then, in that circumstances, seller will issue the credit note that this is the credit note of against the 2 or 3 shirts which are defective. You can adjust that value, or you can ask the another 2-3 shirts when we will sell in another lot. So this is the adjustment or return of goods. Price adjustments. Credit notes can be issued for price discrepancies, discounts, or promotional offers, actively adjusting the final price. You are adjusting the price. Credit notes can be issued for the price discrepancies. Suppose if it is price is 100 rupees, and once you are selling it 105 by any means there is some discrepancy or due to some any reason, then that rupees 5 can be adjusted by issuing. The seller can issue the credit note of that 5 rupees, and that can be adjusted. Credit notes can be issued for price discrepancies, discounts. Otherwise, once you want to give a discount, if the cost of the shirts is 100 rupees and you want to sell to the buyer on discounts, then you can issue a credit note of 10 rupees. That this cost is 100 rupees, even though I am selling in 100 rupees, but also giving a 10% discounts of 10 rupees. That, and I will issue the credit notes of rupees 10. Then you can claim it later on. Or promotional offers. Suppose if you want to giving some offers, like in many of the offers, 30% off, 20% off, such type of the offers you are giving. Once the cost is 100 rupees and you are offering in 80 rupees or 90 rupees, then you can issue a credit note of rupees 20 or 10, effectively adjusting the final price. And third point is prepayment adjustments. If a buyer prepaid for goods or services and the final amount is lower, a credit note can be issued for the difference. Suppose I'm giving an example. Suppose if the cost of the that shirts 100 rupees, and once sometimes it is possible that you have placed an order for the 10,000 shirts, and 10,000 shirts approximately cost rupees 2 lakhs approximately, and you have paid rupees 2 lakhs in advance. That sometimes it is possible in the business that I say once you are placing an order, you have to pay certain advance amount. And once he has paid the entire amount in advance and the final price is 1,90,000, then this amount can be adjusted by issuing a credit note that yes, we have received 10,000 extra amount from you and I am issuing the credit note for that, and this 10,000 can be adjusted in the later purchases. So there are the three types of the issuance of the credit notes: either return of goods, second is price adjustments, and third is the prepayment adjustments. For all those three, we can issue a credit notes. Requirement of the valid credit notes: unique identification numbers. There, of course, once you are issuing the credit note, that credit note have a unique identification number. Of course, there should be some number of that credit note. Each credit note must have a unique identification number to facilitate tracking and record keeping. Because once you are issuing the credit note, it has to be certain numbers that yes, by this number you have issued the credit note, because there are the certain, it may in future, because it is a future adjustments. Once they will show the credit note to you, then certainly you will adjust. So there should be number, because you have to keep record of all those credit notes. Reason for issuance: a clear explanation of the reason for issuing a credit note is crucial, whether it's for returns, price adjustments, or other factors. There should be some, you have to specifically mention the reason for the issuing the credit note. Why you are issuing the credit note, it has to be clearly mentioned. Second point is details of the original invoice. The credit note must clearly reference the original invoice number and date, linking it to the relevant transactions. Detail of, suppose whatever your original invoice, suppose if it is the original invoice of rupees 1 lakh and you are issuing the credit note in that particular respect of that invoice, then while issuing the credit note, you have to also mention the original invoice against which this credit note is being issued. The credit note must clearly reference the original invoice number and date, linking it to the relevant transactions. Date of issuance: the date on which credit note is issued should be clearly mentioned, establishing the time frame for adjustments. On which date you are issuing the credit note, date on which the credit note is issued should be clearly mentioned, establishing the time frame from adjustment and whatever the time frame. Suppose if it is adjusted in the 2 months, 3 months, or 1 month, so it should be also be very clear. While issuing the credit notes, all those points you have to keep in the mind. Adjustments and refunds using credit notes. Credit notes issued: the seller issues a credit note to the buyer detailing the reason for the adjustments and the amount. Once the seller is issuing a credit note to the buyer, then it has to be clearly mention the reason for the adjustments and amount. What is the amount of that credit note and what is the reason for the adjustment? Why you are adjusting and why you are issuing that credit note? It has to be clearly mentioned on that credit note. Adjustments made, and you have to also clearly mention within this time frame you can utilize this credit note. The credit note can be applied to future purchases or used for refund depending upon the agreement between the seller and buyer. This adjustment meant it depends upon the seller and buyer, what is the terms and conditions between the seller and buyer for use this credit note. Credit note can be applied to the future purchases or used for a refund depending upon the agreement between the seller and buyer. Refund processed: if refund is chosen, the seller processes the payment back to the buyer, reflecting the amount specified in the credit note. Suppose just whatever the Mr. Pallav has given an example, thus that they are purchasing the 10,000 t-shirts and jeans, and that is again he has approached that seller and he said that yes, I want to purchase only 7,000 clothes, then he has to return 3,000 to Mr. Pallab. So this is the process of the credit notes. That once whatever it can be utilized in full, it can be utilized in the part. Record keeping and documentation. Credit note register. Maintain a register of all credit note issued, including details like the invoice number, date, amount, and reason for issuance. You have to maintain a register because it cannot be remember all those credit notes being issued. Then you have to maintain a register, whatever the credit note is issued. Once any person approaching you, the taking that credit notes, then you have to reconcile that whether it has been issued by me or not. Then you have to keep a record and maintain a register that whatever the credit note is being issued by you. Original invoice copies. Keep copies of the original invoices related to the credit notes, ensuring a clear audit trail for each transactions. Against which original invoices you have, suppose you are issuing the original invoices of rupees 1 lakh, and out of 1 lakh, you are issuing a credit note of rupees 10,000, then you have to keep the original invoices, copies of the original invoices intact so that it can be remembered. Communication records documents all communication with the buyer related to the credit notes, including emails, phone calls, and other relevant interactions. You have to also keep record all those communications between the buyer and seller, because it is a credit note is only talks about between the buyer and sellers. It may be with the government authority, then you have to keep all those relevant interactions between the parties. Tax implications of the credit note. This is the important. Input tax credit. Buyers can claim input tax credit on goods or services returned, but this is subject to the GST Act provision and timelines. Output tax liability. Sellers must adjust their output tax liability based on the credit note amount, ensuring compliance with the GST regulations. This is one of the important things in the filing of the return. Once you are issuing the credit note, then you have to file the return within the particular period of time. Then you can claim your tax with the government. The person who issues a credit note, suppose once you are issue an invoice, an invoice of rupees 1 lakh, then you are paying the tax on rupees 1 lakh. But sometimes buyer has returned certain goods and you have issued the credit note of rupees 50,000 or 40,000, 20,000, suppose it is 20,000. Then you have paid extra tax because you have paid the entire tax on 1 lakh. But once the goods has been returned of 20,000, then you are liable to pay only tax on 80,000, not on the 1 lakh. Then whatever the 20,000 amount you have paid extra, that can be adjusted later on. So filing of return is very mandatory. The person who issues a credit note in relation to the supply of goods or services or both must declare the details of the such credit note in the return for the month during which such credit note has been issued, but not later than September following the end of the financial year in which such supply was made, or the date of the furnishing of the relevant annual return, whichever is earlier. The word is very clearly and specifically used, whichever is the earlier. Once you are issuing the credit notes, then you have to file the return. Once you are filing the GST return, then you have to specifically mention on the GST return that this credit note has been issued in that particular month. But in anyhow, if you want to claim anything in that particular financial year, then it has to be before the September of that. Suppose if it is 24th March, 31st March 2024 is your financial year cutoff date, then whatever you have issued the credit note, it has to file the return on or before 30th September 2024. Otherwise, once you are filing the annual return before 30th September, then you have to file your credit note returns on the date of filing, before the date of the filing of annual return. Because the 30th September is the last date for conducting an AGM and all those things. The person who are company secretary are very well aware, chartered accountant can understand. The date of the filing, date of the placing of the final annual return and balance sheet, placing of the balance sheet before the AGM is 30th September. And once you are placing on record, placing the balance sheet before the AGM on 30th September, then you can file the annual return within 30 days, balance sheet within 30 days, and annual return, this is 30 or 60 days. There are the two things. So the 1 month time is granted. If you are placing your balance sheet before the AGM, suppose if it is in August, then you have to file the return within 30 days, means up to 30th September. In that case, you have to file your annual return of the credit note on or before 30th September. Otherwise, it can be placed, it can file the return up to 30th September of that financial year. In other words, the output tax liability cannot be reduced in cases where credit notes have been issued after September. It is also very clearly mentioned. In other words, the output tax liability cannot be reduced in cases where credit notes have been issued after September. Once it is issued after September, then you can claim the credit note in another financial year. Dispute resolution and the credit note management. Clear contracts establish clear terms and conditions regarding credit notes in contracts to minimize misunderstanding. Establish clear terms and conditions regarding credit notes in the contracts to minimize misunderstanding. That whatever your terms and conditions regarding the credit notes, it has to be very clearly mentioned in your agreements. So please be very clear. Whatever the contract you are entering into it in the parties, it should be very clearly mentioned about the credit notes. What is the implications of the credit notes, how the credit note will be issued, and within what time it will be issued, what should be the date, and all those things, everything should be very clear. Negotiation and mediations. Encourage open communication and attempt to resolve disputes amicably before resorting to the formal legal channels. Sometimes it may be possible that the person issuing the credit notes to you, and once you are approaching that person, that yes, you have issued this credit note, please adjust this credit notes or give me something against this credit note. But sometimes people may not adjust your credit notes. So before going to the legal process, that once he will refuse to realize your credit notes, certainly whatever that you don't have any option rather than to resort to the legal proceeding, you will go to the court to enforce it. Legal recourse. If dispute cannot be resolved through negotiations, legal remedies are available under the relevant laws. This is all about, we have discussed in theoretical portions what is the credit notes. Now we will discuss, there are the certain landmark judgments of the Honorable Supreme Court, how the credit notes implications is. So before proceeding further, if anyone wants to discuss something, anyone wants to say something about the credit note or want to understand, certainly please come forward and discuss it. If any question, if any query, then please come forward.
Good afternoon, sir.
Good afternoon, Deepak ji.
Sir, I have one question.
Yes, sir, please.
In case of B2B, right, we can issue the credit note, but when we talk about the individual customer, right?
Right.
So it is a foundation to accept the credit note from the company dealing in.
No, there is no foundation at all.
Okay.
It is a discretionary power vested with the seller and buyer. Suppose once you are, because the credit notes can be only issued in the conditions when once you are purchasing something, and that is the piece is defective or something not in the up to the mark, then you are returning that goods or you are not accepting their services. In that circumstances, the question of the credit note is arises.
Yes, sir.
And once you are not satisfied with the goods and you approach to the seller, yes, Mr. So-and-so, I am not satisfied, this is not up to mark, please return it. What the seller can do, seller can either return the goods immediately, otherwise he can issue the credit note to you. It is up to you whether you want to accept that credit note or not. Once you will not accept the credit note, he cannot force you that no, you have to take a credit note, not at all. He cannot force you.
But in case if I accept the credit note, it is as good as cash, right?
Right.
If I don't want the product, then I can claim the refund also.
Yes, of course. Once you are not ready to accept the product, certainly once you paid that amount, certainly you will claim your refund. Please give me my amount. Once he is not giving the amount, then certainly you can take a recourse of remedy available to the whatever the remedy available within the framing of laws.
Okay, sir. Thank you, sir.
Please. Anyone, please? No question? We can move forward? Yes, please.
Yes, sir.
That is one of the landmark judgment of the Honorable Supreme Court on the credit notes. Approximately 106 pages judgments passed by the Honorable Supreme Court. That is the very latest judgment of the Tata Motors Limited versus Deputy Commissioner of the Commercial Taxes, SPL and another. This judgment was passed probably in 2023. Yes, 15th May 2023. In this case also, that is the normally once the matter before the Supreme Court, there are the two bench judges are dealing with the matter. But once the two judges benches are conflicting views, one judge having different view, another judge having the different view. In these circumstances, the matter referred for the higher bench. It may be for 3 bench, it may be for 5 bench, it may be for the 7 bench, and up to maybe 11 bench. So in this matter, this is the Tata Motors Limited versus in this matter was referred for the higher bench. The two judge bench has not taken the decisions, and then it was referred for the higher bench to take the decisions. What is the implications on that? So first of all, this is also relates to the credit notes. So certainly you will understand the definitions from the different perspectives. What is the credit note is? So first of all, we will discuss about the definitions of the credit note. Then we will come into that. What is the case law? What is the laws on this case has been discussed in detail by the Honorable Supreme Court. So in this context, it is necessary to understand the legal import of the expressions credit note, which has been credited by Sri So-and-so, Learned Senior Counsel Appellant, according to the various dictionary and references. Definitions of the credit note are as follows. P. Ramanatha Iyer, Advanced Law Lexicon, 6th edition, volume 1, credit note. Credit note is defined as a note showing that an allowance is to be made for shortage or defects in goods supplied and returned to sender, or for overcharge in price. The term is also used for a note or document that confirms the availability of the funds for future purchases, as when goods are paid for but later returned to the supplier. A sales credit note is defined as note sent from a seller to a buyer to cancel partly or in total a charge that has already been invoiced. The credit thus granted can be offset against the cost of the future purchases and is therefore, from the seller's point of view, better than making a cash refund. here it is specifically defined in the dictionary meaning. The credit thus granted can be offset against the cost of the future purchases and is therefore from the seller's point of the view better than making a cash refund. Always sellers once receive the amount always prefer to sell the goods rather than to refund the amount. So sellers issue the credit notes. The only intention behind that either we should not refund that amount and it can be adjusted or he can purchase. Of course, once the buyer is purchasing something from the seller is of course enjoying certain profits. So once he receives the amount, it is a normal human tendency that they don't want to refund that amount or return that amount. Certainly they want to adjust it. And in that adjustment, certainly they are going to be benefited by selling certain products. He is certainly going to be benefited because he is earning some profits on that. So dictionary meaning is also that it is better than making a cash refund. According to the Oxford Advanced Learner Dictionary, if damaged items have to be returned, the manufacturer may issue a credit note. According to the Cambridge Advanced Learner Dictionary and Thesaurus, a credit note is an outstanding amount to be used when needed. A credit note is an outstanding amount to be used when needed. It is document that a seller gives to a buyer who returns a product which the buyer may use at a later date or time to pay for something else. It is a document that a seller gives to the buyer who returns a product which the buyer may use at a later date or time to pay for something else. Of course, that credit note can be used later on. According to the Collins English Dictionary, a credit note is a piece of paper that a shop gives when a person returns goods that have been bought from it, which entitle the buyer to take goods of the same value without paying for them. A credit note is a piece of the paper that a shop gives when a person returns goods that have been bought from it, which entitle the buyer to take goods of the same value without paying of them. Of course, what is the credit note is actually some valuable considerations, that amount that carrying the certain amount. Suppose I'm issuing the credit note of rupees 100, then you can purchase of anything of the 100 rupees value. According to Black's Law Dictionary, 5th editions, credit memorandum is a document used by a seller to inform a buyer that a buyer's account receivable is being reduced because of the errors, returns, or allowances. Under the goods and service tax laws, it has been stated that after the invoice has been issued, there could be situations where the quality of the goods or services are both supplied is not to the satisfaction of the recipient, thereby necessitating the partial or the total reimbursement on the invoice value. In order to regularize these kind of the situations, the supplier is allowed to issue what is called the credit note to the recipient. Once the credit note has been issued, the tax liability of the supplier is reduced. The credit note is therefore a convenient and a legal method by which the value of the goods or services in the original tax invoice can be amended or revised. The issuance of the credit note will easily allow the supplier to decrease his tax liability in his returns without requiring him to undertake any tedious process of the refunds. So this is one of the techniques, especially for the implications of the tax. The seller is issuing the credit notes that they can claim with the government or anything that once you are paying the another tax, then that amount can be reduced. The issuance of the credit note will easily allow the supplier to decrease his tax liability in his returns without requiring him to undertake any tedious process of the refund. Rather than asking for the refund, it can be adjusted. Therefore, the entire controversy must be viewed in the. So we understand what is the definition of the credit notes. once you are talking about this case law, the question before the Honorable Supreme Court, because once you are approaching to the Honorable Supreme Court, only the question of law is being discussed, nothing else. So the question is discussed in this matter. Going to the background of that these appeals arise from the judgment of the Honorable High Court, Karnataka, Rajasthan. There are the bunch of the matters. High Court of the Karnataka, Rajasthan, Allahabad, Madhya Pradesh, Bombay, Andhra Pradesh, Kerala, Gujarat. Since common question of law and facts have been raised in these appeals, wide reference order dated so-and-so made by a bench of the two judges, it is a reference matter. It means the two judges bench are not able to decide this issue, then this issue has been referred for the higher bench. By bench of the two judges to a bench comprising of the three judges, the reference has been heard and accordingly answered. Then it is referred for the higher bench. By order that so-and-so reference has been made to the bench of the three judges, which shall hereinafter be referred to as the reference order. But the pertinent paragraphs of the reference order read at under. So we were only discussing the relevant portions, what has been discussed in the law, not the entire, because it is 103 pages and that will take very much time. The question that the crucial point, this is the, it is visible to all of you? Yes, my friends. It is visible
Yes,
to all
sir.
of you?
Yes, sir. It is.
The crucial point which would be arise for consideration and over which the matter needs to be debated is as to whether in the case of such a warranty for the supply of the free spare parts, once the replacement is made and defective part is returned to the manufacturer, sale tax would be payable on such a transactions relating to the spare parts based on the credit note which may be issued for the said purpose. In this case, the question of law before the Honorable Supreme Court, that there is a manufacturer, dealer, and customer. The Tata Motors are selling cars to the customer. Tata Motors is not directly selling cars to the customers, but it is selling through the dealer. The question arises that once the car is being manufactured by Tata Motors and sold by the dealers, and there is a certain default, there is a certain period of the warranty. Suppose once you are purchasing the car, there are the certain period of warranty, 1 year or 2 years. In that within warranty period, if any part is being defective and not operative or not working, then you can approach to the dealer that yes, once you have sold this car and this part is not working properly, therefore please replace it. So what the dealer will do, dealer will replace that part because this is within the warranty period. Dealer will replace that part and the dealer claim the price of that spare parts from the manufacturer, because the manufacturer is bound to replace that part free of cost. The question arises whether the dealer is replacing that parts and the manufacturer is issuing the credit notes to the dealer. Then the question arises on that credit note issued by manufacturer to the dealer, whether the sale tax is applicable or not, because it is a very case relates to 2007. In that particular time, the GST was not enforced. Later on, suppose then you can relate rather than sale tax, you can relate to the GST. As of now, once we are discussing about, so whether the GST is applicable on that or not, then it is very elaborately discussed. Thus, if there is no consideration for these replaced parts, can sale tax be levied at all? Because the customer didn't pay any consideration on the replacing parts. So once there is no consideration involved, then the sale tax or GST, whatever the tax, we can simply say tax. The tax is applicable or not. But once the manufacturer is issuing the credit notes to the dealer, then the tax is applicable because there are the different views are taken by the different courts. But it is a moot point whether credit notes can be treated as a mode of payment or not. This was the question before the Honorable Supreme Court. Whether the credit notes can be treated as a mode of payment or not. Credit notes can be treated as mode of payment or not. This question before the Honorable Supreme Court. Then we will further move. The point for the consideration under the reference order is whether a credit note issued by a manufacturer to the dealer of the automobiles in consideration of the replacement of the defective part is the automobile sold pursuant to the warranty agreement being collateral to the sale of automobile is exigible to sale tax under the sale tax enactment of the respective states. While considering such questions, the reference order doubts the correctness of the observations made in so and so. Then we will proceed further. What is the different views by the different courts, different tribunals, high courts. So there are the different views of the different high courts, tribunals. On July 22, 2006, Deputy Commissioner Appeal of the Jodhpur passed an order upholding the levy of the tax upon an assessee, but setting aside the levy of the interest and penalty imposed by the assessing authority under the what is the because we are discussing and at the end of the this decisions we will discuss what the Supreme Court says. But before, what is the different tribunals and high courts? What is the opinion of this different high courts and tribunals? Then the Deputy Commissioner of the Appeal, Jodhpur, passed an order upholding the levy of the tax upon the assessee. Means tax can be levied upon the assessee, but setting aside the levy of the interest and penalty imposed by assessing officer under Section 65 of the Act. No interest, no penalty. Then we will move further. Matter was taken up by the Rajasthan Tax Board in the Rajmer, which issued a common judgment so and so, disposing of all 12 appeals. The Rajasthan Tax Board set aside the decision of the Deputy Commissioner Appeal and thereby set aside the imposition of the tax. Then this is the view taken by Rajasthan Tax Board that there should be no tax on the credit note. It found transaction replacing the defective parts did not fall within the definition of the sale as defined under Section 230 of the Rajasthan Sale Tax Act. Also concluded the facts of the case issuing from the, because this is the landmark judgment of Muhammad Akram Khan. The entire case is based on this Muhammad Akram Khan. Certainly, we will also discuss Muhammad Akram Khan as well. Before and we conclude, the another point you are to discuss. The precise questions considered in the said case was whether the transfer of the parts replaced in pursuance of the warranty amounting to a sale within the meaning of the Sale Tax Act, and whether the sale price of the car which has been subjected to sale tax could be regarded as having included the cost of the value of spare parts used in the replacement in compliance with the stipulations in the warranty. On considering the warranty clause, it was noted that the sale of the cars was along with the warranty to replace defective parts free of cost, and the price was fixed at the time of the sale. After noting the distinction between the condition and warranty in a contract of the sale of goods, it was observed that the consideration of the defective part that might be replaced under the warranty was not separately specified because it was included in the price fixed at the time of the sale of the car. In other words, the transfer of the property and the part replaced in pursuance of the stipulation of the warranty is part of the original sale of the car for the price fixed and received from the buyer or consumer. The price so fixed and received was a consolidated price for the car and the parts that may have been supplied by way of the replacement in the pursuance of the warranty. Accordingly, it was observed that the Financial Commissioner was right in holding that the price for the replaced parts was already charged and paid, on which sale tax was already levied and collected, and hence there was no liability to the imposition of the further sale tax. There are the different views of the different courts, but we will come on this issue, that what the Supreme Court says, because that is more important in this decision. Then the opinion of the Supreme Court we will look into. In view of the above, the transactions between the manufacturer and dealer while acting pursuant to the warranty in the circumstances explained above has to be construed as sale within the meaning of the meaning and definition of the sale under the sale tax X under the considerations. Though it is the finding of the Supreme Court that once the manufacturer are issuing the credit note to the dealer and dealer is replacing the goods, even though free of cost, but the tax will be levied. When we go through the entire judgment, because it takes some more time. In view of the above, the transactions between the manufacturer and the dealer while acting pursuant to the warranty in circumstances explained above has to be construed as sale within the meaning and definition of the Sale and the Sale Tax Act under consideration. In the circumstances, the reference is answered in the following. What is the final decision of the Honorable Supreme Court? The judgment of this court in the Muhammad Akram Khan, certainly we will discuss Muhammad Akram Khan as well, is applicable to situations where the manufacturer issue a credit note to a dealer acting under a warranty given by the manufacturer pursuant to the sale of an automobile in the following situations. The dealer replaces a defective part of the automobile by a spare parts mentioned in the stock of the dealer, or when the same is purchased by the dealer from the open market. In such situations, the credit note issued in the name of the dealer is a valuable consideration for a transfer of the property in the spare parts made by the dealer to the customer, and hence the sale within the meaning of the sale tax legislation of the respective states under consideration. The value in the credit note is thus eligible to sale tax under the respective sale tax enactment under the considerations. So it is a final finding of the Honorable Supreme Court that once the manufacturer is issuing to the credit note to the dealer, then the tax is implicable, tax is liable to be paid. And another situations has also been dealt with in this matter. Muhammad Akram Khan does not apply to a case where the dealer has simply received the spare parts from the manufacturer of the automobiles. Once the dealer is not replacing the goods from on its own or purchasing from the market, but it is the goods is directly supplied by manufacturer to the dealer free of cost without issuing any credit note, then tax is not applicable on that issue. Doesn't apply to the case where the dealer has simply received the spare parts from the manufacturer of the automobile so as to replace the defective part therein under a warranty collateral to the sale of the automobile. In such a situation also, the dealer may receive the consideration for the purpose of service rendered by him. The dealer may receive the consideration for the purpose of the service rendered by him as a dealer under a dealership agreement or any other agreement akin to an agent of manufacture, which is not a seller, not a sale transactions. In that circumstances, tax is not applicable. On the above understanding of the judgment of this court in the Muhammad, we are of the view that the same doesn't call for any interference. In the light of the above, our view overruling of the judgment in the case of the Prem Motors and Geo Motors in Muhammad Akram Khan is just and proper. It is reiterated that the credit note issued by the manufacturer to a dealer in situation explained above is a valuable consideration within the meaning of the definition of sale and hence eligible to the sale tax under the respective state enactments of the state under considerations. In the result, appellants, dealer, SSC are liable to pay sale tax under the respective state amendment under the considerations. In view of the above, appeal filed by the dealers are dismissed. The appeals filed by the revenue are allowed. This appeal was filed by the both dealer as well as the revenue government state. We will just look into the Muhammad Akram Khan judgment as well. This is also the judgment of the Honorable Supreme Court. This is on the same on the credit note. These two appeals, this judgment relates to 2003, and that judgment was relates to 2023. These two appeals relate to the common judgment rendered by a learned single judge of the Allahabad High Court. The appellants herein was a dealer registered under so and so tax act for the relevant assessment years. The only questions involved in these appeals is whether a amount received by the assessee for supply of the parts to the customers as a part of the warranty agreement was liable to tax. The assessee was an agent of Mrs. Mahindra and Mahindra. In this judgment, the only question arises whether the Mahindra and Mahindra issue a credit note to the dealer, then that credit note is taxable or not. Then in this judgment also, the Honorable Supreme Court finds that once the credit note has been issued by the manufacturer to the dealer, then that credit note is taxable and it be deemed to be the sale. Credit notes were issued by the manufacturer to the assessee in respect of the price of the parts supplied to the customers. The assessing officer was of the view that the payment received through credit notes amounted to a sale in terms of section so and so. Said provisions are so far relevant read as follows. It was held by this court that the manufacturer furnishes warranty covering the cars sold under the warranty. All defects on account of the faulty manufacturer has to be set right, and the defective parts have to be replaced free of cost by the manufacturer or his dealer within the specified period of the given distance traveled by the car. The car manufacturers enter into an agreement with the manufacturers of the components providing for the warranty so far as the components supplied are concerned. The whole object behind the warranty is that the consumer who has make a heavy investment for the vehicle should be assured of the proper performance of the vehicle in a trouble-free manner for reasonable length of the time. Therefore, entire cost of the warranty was to be borne by the manufacturer. The categorical factual finding recorded by the taxing authority and the High Court is that the assessee has received the payment of the price for the parts supplied to the customer. That being so, the transactions were subject to levy of the tax, as has been rightly held by the High Court. So in this judgment also, the Honorable Supreme Court says whatever the High Court has passed the decision, that is, yes, tax has to be levied and then you have to pay the tax. So this is all about what we are trying to cover today in the within short span of the time of an hour. So any of one of our friends want to discuss something, certainly please on your videos, and we can see some beautiful faces. Yes, Mr. Pallav, Sushil, Kisan, Ayush, Vedika, Parthvi Sharma, Deepak ji.
This is a very interactive session and very knowledgeable for all of us, I think. और बहुत अच्छा लगा सर ये सेशन लेके क्रेडिट नोट के ऊपर.
Thank you so much. Yes, Ms. Vedika, we want to say something.
Yes, sir. Sir, it was a very wonderful session, and I would like to provide vote of thanks if I.
If any of our learner friends wants to discuss something, then certainly they can discuss. Otherwise, certainly. Yes, any one of you? दीपक जी, आपके भी कोई और सवाल हैं? दीपक जी, हमें सुन पा रहे हैं? No question? चलिए. Yes, Miss Vedika Kapoor, go ahead.
So, good afternoon, everyone. On behalf of the organizing team, I would like to extend my heartfelt thanks to each one of you for joining us today for this insightful webinar on the laws governing credit notes by Dr. Nityanand Singh. Your presence has added an extra spark to the session and made it even more special. Dr. Singh's deep insights into this valuable topic have truly enriched our understanding, and we hope you found the discussion valuable and engaging. I will also like to express my gratitude to Dr. Nityanand Singh for taking the time to share his expertise with us. His knowledge and perspective have greatly contributed to making this session both informative and impactful. Before we conclude, I request everyone to share their email IDs and names for the distribution of participation certificates. We truly appreciate your enthusiasm and engagement throughout the webinar, and we look forward to staying connected for future sessions. Once again, thank you for being a part of this enriching experience. Have a wonderful evening ahead.
Thank you. सभी साथियों को नमस्कार. We have each and second and fourth Saturday we have the sessions. You all are the most welcome to join the session. Thank you. Thank you for a very valuable time. Thanks. Now you can leave the session. Thank you. Thank you, Ms. Vedika.
Thank you, sir.
Thank you, Ms. Kirti as well.
Thank you very much, sir.